Listen to what the CEO of BlackRock, Larry Fink, had to say about all the market volatility caused by the war.
I don't pay much attention to the short-term volatility, but I focus more on these longer-term trends. Do I believe the war is going to be lasting a long time? No. Do I believe oil is going to be reverting back to where it was? Maybe even lower. I mean, if the outcome of the war is a neutralized Iran, and they are allowed to be, selling products into the market again, oil products into the market again, I mean, there's probably a great probability that oil is going to be below 50. I do believe the markets find a way to balance out.
Oil below 50 would be good, would it not? Kenny Polcari joining me this morning. Trump and Fink think the market will be back on track relatively soon. All right, Kenny, if it stretches into April, Goldman Sachs says the price of oil will go to nearly $150 a barrel. That cannot be good for the market. What's your analysis?
Well, certainly, if it goes to $150 a barrel, it's not going to be good, at least in the short term, for the market, right? I'm in this camp, like with Larry Fink and a bunch of others. I do not think this is going to stretch on that long. I mean, when in April? Is it April 1st? Is it the end of April? Did they define it? I don't know. But one way or the other, I think that this is going to be over sooner in terms of oil being able to navigate. Whether or not we've actually solved the whole problem, maybe not. But I think the strait will be open, and it'll allow for the commerce and oil tankers to use the strait, and then things will calm down. And yes, then I think the market will stabilize. But until that happens, the volatility and the anxiety level has been raised. And so the markets the path of least resistance in that case is lower. And it will continue to be lower until there's more stabilization.
All right. In the grand scheme of things, we've got to tell you, the Dow is up 14%, S&P up 20%, NASDAQ up 30% from 1 year ago. But Kenny, people don't look back and say, oh, I'm doing well, I'm up 30%. They say, oh, wait a minute, right. I'm not doing well, I'm down 20% from the high. That's the way people look at it. That's why people are negative at the moment.
Right. But listen, that's also dependent on, you have to look at the stocks that are down, right? We've talked about this. Tech sector's completely been, put under pressure. Names there in the correcting territory, even bear market territory in some names that you love. Microsoft, I put in my note this morning, Microsoft, Palantir, those are great names. They're down, but they're starting to find some bids because they've been oversold. But yes, to your point, if you look at it just from the beginning of the year, you don't necessarily feel so good. But if you look at the longer term and you look at where you were a year ago or 2 years ago to where you are now, you're certainly in a much better position. And you have to understand that, if you're a long-term investor, this is about the long term. To Larry Fink's point, I'm not focused on the short-term day-to-day volatility as much as I am the longer-term trend on behalf of investors.
All right, Kenny, you have a good weekend. We'll see you again real soon. Thanks. Kenny Polcari.